Major funding for these broadcasts is made possible by grants from New York Community Bank, Capital One Bank, Perfect Building Maintenance, Chase Commercial Term Lending, M&T Bank, Customers Bank, Genova Burns, Witkoff, Greenberg Traurig. Additional support is provided by AKA Hotels, Corman Communities, Aerial Property Advisors, AVR Realty Company, Bank of America Merrill Lynch, Bank Leumi USA, Briarwood Organization, CBRE, Citizens Bank, Collins Building Services, CPEX Real Estate Services, Cushman & Wakefield, DDG, Dime Savings Bank of Williamsburg, Douglaston Development, Levine Builders, Fisher Brothers, First Nationwide Title Agency, Flushing Bank, Foley & Lardner, Friedman, Handler Real Estate Organization, HAP Investments, Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, Kilroy Architectural Windows, New York's Window Company, Madison Realty Capital, Matone Group, Mercantile Commerce Bank, Meridian Capital Group, MHP Real Estate Services, New Banks, Optimum Window Manufacturing Corp., People's United Bank, Rosewood Realty Group, SJP Properties, Sterling National Bank, Sterling Risk, Stonehenge Partners, TD Bank, Terra CRG, The Continuum Company, The Moynihan Group, and These Friends.
New York City, the home of 8.5 million people, 55.5 million visitors last year. All these people come here. So who wants to be here? The banks. Every bank wants to come to New York City. They come from Little Rock, Arkansas. They come from Montebello. They come from Wyomissing. They even come from Englewood Cliffs. So today, I've brought together this assortment of the new players in town coming to New York to find out why they want to be here, because I want to know if the gold is down on the streets. My guests today include Dick Ehst, who is the president and COO of Customers Bank from Wyomissing, Pennsylvania. George Gleason, who is the chairman and CEO of the Bank of the Ozarks out of Little Rock, Arkansas. Frank Sorrentino, close by, who is the chairman and CEO of ConnectOne Bank out of Englewood Cliffs. And last but not least, Jack Kopnisky, who is the president and CEO of Sterling National Bank, who's really a bank who's been around since 1929 in New York, but basically originally out of Montebello. You said before the show, George, you've been here a number of years, but you really didn't open up a loan production or even a true banking facility until 2013. Why has the Bank of the Ozarks, come to New York City, into the region?
Well, we originally did transactions in New York City through our real estate specialties group that's headquartered in Dallas, Texas. And we began to meet New York real estate players when they were doing transactions in Dallas and Houston and Atlanta and Phoenix, and we were doing prime lending for them on their real estate transactions.
But the business in Houston, Dallas, Arkansas, Florida is different than doing business in the Apple. This is a different market. Even, you take, Jack over here, Montebello, Hudson Valley, Yonkers, New York City, and Frank knows he's on both sides of the water over there. It's a different world.
Very much so. And as my real estate lenders were in New York working with New York developers and New York debt funds, mezz players on southern projects, we received a lot of overtures to come to New York and work on this project or that, and we initially declined that because it is a very different market. But we developed a strategy over time to come in and do some low leverage, very straight down the middle of the plate transactions, did a number of those, decided that it would be beneficial to have boots on the ground here in the city, so we opened a loan production office for our real estate specialties group on Park Avenue, and then subsequently bought a bank that has a presence here that lends really to a little bit different segment of customer than our real estate specialties group, but gained a small actual banking presence in New York City.
We go to the other side of the table over here from Englewood Cliffs. We have somebody who's not originally a banker. We have a builder over here, somebody who is building over there, who's learned the real estate business on both sides because he was an investor in bank stocks and other things. So how do you look at recently, in the middle of June, opening up your first New York City office? How do you decide, you can stay in New Jersey?
I don't know how my banker colleagues will take this, but the greatest quote that I use over and over again is when they asked Willie Sutton, why did he rob banks? And he said, that's where the money is. Well, New York City, as we sit here today, is $1.5 trillion of GDP, the New York City marketplace, New York City metro marketplace, in a $17 trillion economy. That's a lot. That's a big chunk of our national economy is within 50 miles of where we're sitting here today. And so it's really natural for us. We were in New Jersey. We're part of that New York metro market. And about 8 or 9% of our balance sheet prior to entering the market in a physical way was actually here in the city in the 5 boroughs. And so it really made a lot of sense for us to want to have a physical presence here. It allows us now to attract talent from the market itself. Many New York people won't come to New Jersey necessarily to work.
You think they're going to go to Montebello?
Jack has some really great offices here in the city.
No, I agree. But so here's the question, Jack. Provident was a Montebello-based bank. Sterling, the acquisition's about 3 years now? Mm-hmm. And then recently Hudson Valley National Bank. But you've changed the bank, because Provident was a different bank when you took it over, when you became president. And then the bank has changed even more when Sterling was taken over.
Sure. So the great opportunity that's out there is we've gone from a $3 billion bank in Montebello, New York, that was generally covering the lower Hudson Valley, made an acquisition of Gotham Bank a year after we got there, and then subsequently Sterling, and then Hudson Valley. Each time we've done this, we've actually taken the best practices of each organization. So it's not like the banks of old where you come in and say, hey, I have all the playbook, do whatever I tell you to do, and just kind of honor that. We've tried to take each step of the way to create a new, more contemporary organization. So as a result, we have a very diverse balance sheet. So generally macro, 50% C&I, 50% CRE, and then a lot of subsegments relative to products and industry sectors. We have very low-cost, diverse deposit side of the balance sheet, a great source of fee income, and an increasingly efficient organization. So, our number one objective out of all the things we do, every decision we make, we try to create positive operating leverage. So simply growing revenue at 2 to 3 times the level of expense growth. So in each of these cases, we had opportunities to enable the new company to become more productive by the teams and putting liquidity to work. So Hudson Valley, as an example, has about $600 or $700 million worth of liquidity on the balance sheet that's yielding, point and a half. We're going to turn that into loans that yield 4 to 4.5. And then, you consolidate a lot of the back office costs so that each step of the way, now we're a $12 billion bank, you got greater returns for investors.
So your bank has been growing by acquisition for deposit balances and then growing the team. You over here, you started a couple of years ago with a small little Pennsylvania bank, and now you've grown to close to $8.1 billion, but not really by buying banks.
That's right.
And also, as Jack was just saying, with the cheap deposit base, you've done with this bank mobile over here. So let's talk about why the bank from Wyomissing. I heard Frank, because this is where the money is, okay? Right. But besides the money, you've also recently gone to Melville, Long Island.
Right.
And you've gone also to New England. So you're looking at different markets similar to George, But you're staying away from construction. And Jack is staying away from construction a little bit. So where are you focusing on? And how are you? And I'm going to ask you and everyone else the question: how hard is it to find good talent? Because there are it's great to be here,
right?
But unless you have the right people who know how to maneuver the streets and the people over here. I hate to say there are snake oil salespeople who will try to put you with a loan that may not be the best type of thing.
Mm-hmm. We've had a rather boring but a rather exciting at the same time strategy to really create value, for our shareholders. And it's boring because we only do a couple things extremely well. But the 95 corridor has really been appealing to us for quite some time. We're very familiar with the 95 corridor and very familiar with New York long before we got here as Customers Bank.
And that's basically because of the experience of you and your people and your senior management team and everything.
Exactly. So the opportunity for us to, as you point out, to acquire 3 tiny companies from 2 failed banks from the FDIC, 1 bank that would have failed if we hadn't bought it. Really represents about 5% of our total company, but it got us into New York through one of those purchases. It got us into New Jersey, which is you can't get into New Jersey unless you acquire something there or start something there. So New York was a natural opportunity for us as a result of our acquisition of the bank up in Westchester, and because we had so many good relationships here in the multifamily environment, because we had that significant relationship with Meridian Capital back when we were sovereign, we knew all the people that could help us really build out this marketplace in a big way. I mean, Meridian, my goodness, they're the largest broker probably in the greater metro area. I think they did over $32 billion last year.
Which brings out an interesting point. I have 3 other bankers over here, and certain banks, especially out of the New York region, do not really feel comfortable with intermediaries or brokers. Sovereign depended on it. Signature depends on it in certain ways. How do you look at the brokers and the intermediaries? And I'll ask the 2 others.
We do business both ways. We do direct business with the largest percentage of our customers, but we also have some very large customers who have a very national real estate practice who do everything they do through designated brokers. And if you cut off the brokers, you can't get to those customers directly. So we do business both ways.
Frank?
Really the only place where we engage brokers is in the multifamily space, and that represents about 25% of our entire portfolio, and I would say about half of that is maybe broker-driven. So it's not really a big part of what we do, but to George's point, there are certain segments of the market where those clients will only go through a broker to get to the bank. We're more about developing a total relationship with our clients.
Which I think, even though Dick said,
so we're not
the Meridian on the real estate, on the multifamily Meridian is very important within this community.
Right.
Okay, but I believe what you've done, and because I know everyone's business a little bit, is your team efforts have relationships with people also. Okay, they may have brokerage relationships, but it's the team effort. So here's my question. How do you maintain, you come to this market, you want to be here, how do you solicit and get the right talent?
Michael, for us, a lot of the business gathering that we've started with in the New York market has just been something that's been ancillary to the client base we already have in New Jersey. Because we're so close to the New York City market, I mean, Englewood Cliffs is a mile from 4-point-something miles from downtown. Yeah, exactly. So a lot of our existing client base already has operations in New York City. Maybe their business is there, or law firms have offices there or whatever. So we already have a natural in, and right now we have inbound calls coming because of our market expansion. Over time, however, we will start to proactively go out and solicit new business in the market.
So here's a question. So you're all here, and what segment of the market do you want to be in? Okay, because, it's a question of profitability that I heard before, deposit uses. I have the money over here. I'm earning, I'm not making enough money. I'm cash rich that I can give it out. Where do you see the opportunities? Is it at the TAMI? Okay, because, recently I've done a number of shows in the subject of technology, the advertising. This is a big market. But TAMI is a new industry, basically, except for the time lives and the other things. But, are you really comfortable with that type of business? Where are the opportunities? Okay, I know you have a leasing business, you have a factoring business, you have the SBA business, and you have, the
warehouse.
The warehouse lines, and I think you also have that. So where do you see? We know there are opportunities here, but which segments of the market are the best opportunities?
So, one of the things that we've talked about a lot is you can't be all things all people in the banking world now. That's how I think, frankly, banks got into trouble. So you have to focus on certain subsegments where you can add value, where you can make a difference with that client. So in our case, we have 27 relationship teams. They focus on very specific product categories and industry sectors where they can add value. So and we have a healthcare team that is able to understand the healthcare industry, focus on certain subsegments of healthcare, and bring value to those
clients.
Right,
like the ambulatory clinics, the nursing homes,
that's right,
the private practices, and so on.
Yeah,
right?
But they also are able to say no to certain segments that maybe have higher risk and lower return, and would not be the types of growth segments we'd be focused on.
Dick, where do you see the opportunities?
We have, because we continue to attract teams, we see significant opportunities in the C&I book. We're basically, a third of our company is in multifamily and investment CRE, another third is in warehouse loans. We deal with about 75 to 80 of the top mortgage banks in the country. And that's a great source of liquidity for us, too, because those churn
all the time.
Every 15 to 22 days. And the big risk in that business is fraud, but we don't have those issues. And the third is the C&I book. And so you've got multifamily, you got warehouse lending, and C&I. And we also did recently acquire from Everbank a whole team of commercial finance folks. And they're based up in Portsmouth, New Hampshire right now. An extraordinary team.
So is that a asset-based type of team? Or?
Well, it's basically equipment financing right now. We're managing getting into the leasing business, but we're doing that very carefully.
What about you, George?
Well, really, in New York City, two areas of focus, and one is the larger project construction and development lending through our real estate specialties group, and then smaller loans that are on stabilized properties through the group that we acquired with the Intervest acquisition.
Well, Frank, what size type of transaction is the bank comfortable, in the ranges? I'm just trying to understand.
So our sweet spot today is in the $5 to $15 million range. However, the average loan size in our bank is probably $3 to $5 million. So we're really going after the smaller business owner, the smaller type projects that we're more comfortable with. And in New York City, even 10 or 15 million is a small number today. We're not getting in front of some of the really larger credits. But that's where we're comfortable. That's where our expertise is. And what's interesting about it, it's a niche in the New York City market for those smaller developers, but it's a pretty wide niche. There's quite a few developers out there.
This is how Sterling, the old Sterling, did a business. They were in that market.
They can't get anyone else's attention. They need someone who's going to hold their hand a little bit. There's points for great execution, getting things closed in a timely fashion, which we have a great reputation. ConnectOne Bank has a great reputation for doing. And so there's lots of business here where a lot of the largest institutions, in some cases, have pushed these guys away because they're too small or whatever.
If you try to talk to Chase or to, or Wells. I mean, they don't know the smaller market. That's not their market. I mean, Chase, even in the construction business, they really only want the very large. I mean, there's a large niche of opportunities in construction lending in the market. It's the German, a couple of the Germans, the Spanish, and the others who are out there who are playing in the market over there. Where do you see your greatest opportunities in the industries?
Much like what Frank was talking about. We've stayed, even though we have $2.5 billion right now in multifamily. We've stayed in that. I think our median size of the loans about 4.8. So we specialize in the 5 to 6 floor walk-ups. I doubt that we probably have elevator buildings, maybe 4 or 5 in our entire portfolio. And those are generational properties. These folks that we deal with, we're dealing with 50 of the most prominent families right now in New York City, and they're generational holders. So we've got folks that they've had properties since the 50s, so they buy and they hold, and they're extremely efficient in the way they operate. But we're all about low risk. We're managing low risk. I'm willing to take a lower yield, and managing the risk levels of the company. But that's where the opportunity is for us here in the 5 boroughs.
Jack?
So the opportunity to me is all about hiring great talent. So the ability, we have these 27 teams, as I said. We have, frankly, lots of candidates lined up that want to join a model like this that is a relationship model. It takes certain types of people to be part of this. And each one of those teams that are looking to join us have a different type of specialty niche. Some are professionally focused, as I said, some are healthcare.
Right, some of the guys are dealing with the accounting firms.
That's right. And that's the opportunity. In New York, there's as many niches and opportunities as you want to go after.
Do you believe, I mean, Frank is speaking about New Jersey, close by. There aren't really, I hate to say, that many great banks out in Long Island. There were the Norfolks, the Capital Ones, and they've really left the market over there, and they don't do that much lending. And then you have a couple of smaller banks who are good banks, like Suffolk County National, Bridgehampton National, these guys who are recently coming out there. Do you see opportunities? Do you lend out in Long Island?
Yes, we do. We lend all over the tri-state area.
Any markets within the tri-state area you prefer to stay away from?
No, we've not redlined a single market and said we wouldn't go there. We're open to quality projects with quality sponsors that make economic sense.
Now, will you go do C&I business in the New York area, or is that really not your?
We don't have the team here. We don't have the capability here to do C&I business.
But now that
we're really a real estate lender at this point. We would love to evolve that, but at this point, we're a real estate lender here.
What would you consider yourself? You would consider yourself a combination lender, C&I and real estate, correct?
Absolutely. Absolutely.
And I'd say you're more C&I than real estate to speak of.
Although I would characterize it as a relationship
no, I think
provider.
Definitely.
Yeah,
So where do you see your opportunities? Now you just opened up at on Madison Avenue and 55th Street.
So we see our opportunities in a bunch of different areas. We've been growing our C&I exposure through our merger recently. Last year, it's about 22% of our balance sheet today. And so there's great, as Jack just mentioned, there are some great niches here in the New York City market. Smaller law firms, smaller accounting firms, smaller insurance agencies and the like that, again, are not being treated well by the largest institutions and who seek out a smaller institution where they can talk to somebody. The rest of our balance sheet is real estate related, and if you're going to be in real estate, New York City is really the place to be.
How important for all of you?
By the way, agricultural lending is not big in our portfolio, and it's probably going to represent a very small part of the New York City business.
It's like when I do shows on the restaurant business and the Broadway business, I say to them the same question. Banks, they said, they are only here to be depository agents. They are not here to be lending organizations to us. So here's the question, with regard
Michael,
to...
that's because we all have this affliction And part of it's my Italian heritage. We like to lend money and get it back.
That's right.
I second that.
Okay.
I second that.
Bricks.
And I'm Polish.
Okay. bricks and mortar. Okay.
We like to get our money back.
He has lots of branches in the South and around the country. He doesn't, you don't have a location downstairs in New York or on the street. You have bricks and mortar. How important today with mobile banking, with internet banking, is the bricks and mortar?
It's dead in this marketplace.
I'm talking about this
in
marketplace.
this marketplace.
I mean,
I don't know in other parts of the country, certainly, and maybe George could comment to how his success ratios and some of the branches he has. We are closing branches and our deposits are going up. New York City, we do not have a retail location. It's a second floor on 55th and Madison.
But can they take deposits?
They can take deposits, absolutely. But our deposits are coming through the electronic channel, whether it's mobile banking, whether it's remote capture, whether it's wire, whether it's whatever it is. But it's not from people walking in with a stack of checks and a deposit slip like we used to do in the old days, going past the velvet rope and whatnot. That's not happening anymore.
Look, the customers have changed forever. My view is the customers have changed forever. They don't want to go in branches for the most part. They want to be able to do their banking as they want to do it. So remote capture on the commercial side, mobile banking. So it's a declining asset.
One of the areas that Dick is heavily involved is, the millenniums. And the millenniums, and part of the millennium is WeWork, okay, the office co-share and all of these small businesses. The small business you might want to do, but the startup small business is a high risk. How do you pick, as I have said in many of my shows and my seminars, how do you pick that right person? I mean, is it gut? Or is it the old C's of credit? No,
it's all the old C's of credit. I mean, when you start at the end of the day, all these unique lending platforms that are coming up, it'll all boil down to the time-tested way to evaluate credit. We've gone through, I think all of us have gone through, 5 or 6 cycles of, there's a new, shiny new object out there, and we're going to stretch on the credit criteria, and we're going to do it quicker and better and all that. At the end of the day, the fundamentals work.
Yeah, we're basically a business bank, and you've got to stay true to those fundamentals. All of us have gone through, as you point out, 5 to 6 cycles, and it's almost like every 10 years we've got to have a lobotomy, because we do dumb stuff all over again.
And by the way, we're in the middle one right now.
Yeah,
so Michael, I just want to call today with a millennial startup business owner, and there was nothing different about that business than any other business. They wanted to talk to someone who was going to give them advice about how to move their business forward and how they could use the bank and its lending products and its depository products. And they needed a person to sit in front of them. This was not something they were going to Google. This was not something they were going to go on to, whatever the other online platforms are. They needed a person who was going to give them a trusted advisor to give them advice about how to run their business. And so when they get to that point, they're going to have to come to a bank like ours.
Right, and that's why I brought together the 4 of you, because I think part of it is that senior management has to be able to and willing to touch the clients. As I've said on a restaurant show, a good restaurant owner makes money by touching the tables. A good banker makes money by touching the clients, keeping in touch with the clients, and maintaining their business. And that's what I'd like to say. Thank you for being here, and I'm certain that you're going to touch your clients and do better. Thanks, Dick, George, Frank, and Jack, and I'll see you next week.